to go away this week based on the overnight activity in the futures market. So we'll talk about that. We will talk about the Berkshire Hathaway annual letter, but really it's just everything at this point comes down to Russia, Ukraine. There is a gigantic vacuum of news. Everything is tied to what is happening over there. An ocean of headlines over the weekend. I'm finding it very difficult myself to keep up with the news flow. We'll do our best to parse through it and what this means for this week's action and trading and short-term trades and the like. But that's where we're at. It's the only thing that matters right now is this conflict, unfortunately. So that's it. Tim Quast is our guest today. So smash that like button and let's go to work. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. All right, I'm going to bring Joel on now. I'll bring Dennis on in a second. Joel, good morning. How was your weekend?
All things considered, pretty good. Yeah. Pretty good weekend. Once again, that news flow is very, you put it very succinctly there. Very hard to follow. Or not hard to follow, just a lot to follow with everything that's going on. But let's look at the markets, look at the implications for today's session. The SPOs are traded down 56. Now that's bad, right? Well, that's not as bad as when it was down at 42, 51, 50. That was off that open last night, and so we have one heck of a rally going. If you look at the 24-hour market, you can definitely get different perspectives on how the market's interpreting all this action. Crude, of course, not of course, but up 365, 95.23. Gold, that's rebounding again, up 25.10 at 1912.70. Silver on the rebound too, up 46 cents at 24.480. Bitcoin, not sure what it did over the whole weekend, but not over 40K here, down 875 at 38,240. Ethereum futures, they're down $81 at 26.35. Let's bring in Triple D here, and Triple D, I mean. Did you trade up to 8 o'clock on Friday?
Yep, I traded the whole thing.
You did.
It was just too busy to leave. I couldn't leave. So lots going on, obviously.
How often do you actually go until 8? Not
Lately, last month, I've been going till 8 just because it's been so much more volatility. When the VIX is pumping over like 25, I'm pretty much trading nonstop just because the money's too high. So again, with my type of trading and efficiency trading, I make more money when the VIX goes up. So the day trading, not the long-term account, we're all getting hit in the long-term account on days like this. But on the day trading account, I do well when the VIX is up. So when the VIX starts getting up over 25, I'm pretty much trading all that I can because I know it's going to come back down under 20 eventually. And then you're not going to be making as much money. So you got to press it when the times are good for trading. And obviously, when you got increased volatility, the inefficiency style that I have, you probably are going to make more money. So I think last week or these last couple of days were two of my best days of the month. Wow. So just because you got whipsaw volatility, same thing here again this morning. I mean, there's the you can complain about the a lot of the the environment we're in, the stock's going down, but there is whipsaw trading action. I mean, Joel, to the lows of the move. Last night when we're talking, obviously lots of headlines to follow it all is nearly impossible. Swift. Talks of high alert on nuclear. I mean, there was so many negative headlines coming out of Ukraine. It wasn't surprising that we opened down as much as we did, but the resilience of this market is impressive as well, and we are off the lows. Let's talk about that overnight range here, Joel, because we got to bring it back to that. I mean, we got hit hard and we've rallied significantly off those lows.
Yeah, I was thinking about that close on Friday, and we ended up positive for the week. At one point, we were down 270 handles, and we came back, and And I'm looking, I'm just like, we got within 8 points of Sunday night high, well, which was actually the Tuesday high. And the whole weekend, I'm thinking, how can that hold? Like, how can that, in this environment? I mean, of course, they said they were going to the table, right? So that was
Yep. Yep.
the catalyst for the rally, and I guess they
Yeah.
still are. I mean, Putin sent his cultural advisor. I'm not sure what how good of a negotiator he is. So I don't know. That was an incredible. I didn't pull up to see if that happened within. I see the first 15 minutes on the upper left chart. So big rally. I mean, you got a lot of those. A lot of the losses back. We got up to 43 and a quarter. And now that's Ethereum here. Let me get the S&Ps back up here. So we're only down 55 handles. I just on the upside. I mean, I can't tell you. Like sometimes you have a better feel for support or resistance. There's resistance in this market that is last week's high is right up there 43.91. We got there on Friday too. If somehow, and I don't know how, if this market can break into the 4400 handle this week, then then I won't get back on the new all-time high train, but I will just be absolutely amazed at the resiliency of the market if we can reclaim that high from last week. On the downside, I think you just got to have a feel, like 42.51. That wasn't even near Friday's low. So it's really hard to find the support. I think the best thing for the market is we have an inside day, couple days of consolidation, the geopolitical situation gets a little bit better, but we got to calm down. The overall volatility makes volatility leads to more volatility. So
Yeah.
that's my support and
I mean,
resistance on
we
that.
can look, at the technicals all we want, but again, I'm going to reiterate that we are in a headline-driven market, and that can have the prettiest chart in the whole world, but you get headlines, coming out that Putin's put the nukes to high alert, and it's going to knock the S&P down significantly. So the SWIFT thing obviously was an issue as well, but we've got a person who is acting very aggressively here now, saying, even those comments, even if it's
Yeah.
just talk, which you would imagine this is just talk, but it's still concerning. So, we don't like to hear talk like that, so, we
Talk
don't know what's said.
nice.
We don't know what to believe. I mean, and then we don't know what the next headline is going to be. All I can tell you is it's probably going to be a half dozen more market moving headlines coming out of Ukraine today. And, if they come to talks, it's going to rally. If this starts a little bit of calming, it's going to rally. If we start to escalate and we start to talk more about nuclear stuff, the market's going to get hammered. So I don't know. I'm not in Putin's mind. So it's impossible to predict this market right now. You don't know what the next headline's coming. So you can look at the technicals all you want, say, I got this all figured out. I think you're fooling yourself, because the only person that maybe has it figured out is Putin, and I don't even know if he has it figured out. So you're sitting here, you're at the mercy of the next headline coming out of Ukraine. How do you play that? You play the chop, you day trade, you do some inefficiency trading. I'm sure bright traders are doing very well in this environment doing that. But, if you're making, I'm going to go all in here, the lows are in, nobody knows that. We don't know what the next headline is going to bring. And it's been a hell of a rally off the lows. So I do think if you're underinvested, if I was going in, I think I would not be going into oil stocks. I've said I've stuck the course here. I mean, let's go to the oil stocks this morning, because they're not doing well. You've got the USO up significantly here. We're up 2.63%, 5% oil overnight. It started to leak the gains away. But I mean, a huge rally in oil. You're like, oh yeah, my oil stocks, my ExxonMobil, Chevron's going to be doing well. ExxonMobil is red. It's trading down right now. XLE is red, trading down right now on a weekend that we're talking about escalations and a mention of nuclear war. XLE is red. That has got to be concerning. I'm wondering, I've been saying it for the last week, how much is baked in here already? And if we do eventually get some calming talks, oil could really actually get hit here. So again, we don't know the next headline. If it gets escalated, oil will go up again. Probably the oil stocks going up again. But if you're long oil stocks this morning, I think you got to be massively disappointed with the performance of them, because you had a lot of headlines working in your favor, and it's not responding.
Yeah, I see. CVX is up a little bit. That's up
Very
39
little.
cents.
Yeah, but you're talking 39 cents on headlines that, and I'm sure at 4 o'clock. At 4 o'clock, were we higher on all these things? Probably, maybe not on Chevron.
Let's see here. The 4 a.m. open on not so much for.
What about XLE? Because
Yeah,
we can
that's more
go look.
diversified.
Yeah, well, it's just more actively traded,
I don't
so
know
you
if
can go to
that
the
spike
individuals. It was
was.
up higher. You can see it
Yeah,
there. It
I don't
was up
know
higher.
what that spike was.
I
That
mean,
it
could,
just.
could could a part of this be tied to BP and other energy giants who are exiting Russia, and
It could be. It could be.
they're taking a charge to do so. Nothing in life is free, so they are BP's. They have a 20% stake in Rosneft, which is like Russian government's oil producer. They're exiting that position.
Yeah.
Those things come at a cost, right?
Yeah.
The Norway sovereign wealth fund, the largest sovereign wealth fund in the world, which is mostly it's an oil fund basically, has $3 billion of Russian investments, and they're selling, right? So these things all trickle down. So
Yep. It's a great point,
wondering if
Spencer.
that's part.
And BP is getting hammered here this morning. It's down 7.8%, which is going to challenge the low of the move, actually taking out the low of the move. So it's a good point there too. I mean, there's so many unknowns as well. I mean, this is just the unknown market right now. And that's why I think you want to have some cash. You don't want to be all in. You definitely don't want to be on margin, because we just don't know what the next headline brings. And even for the oil stocks, which you would think, would be, the safest investment in this environment, like to your point, well, with what are the trickle down effects here from, what's happening in Russia? It's really, really hard to call.
It's very convoluted. We
It
need
is.
we need a political scientist here to.
And I don't even know if they would get it right. But I mean, even going to the RSX, which is, incredible to look at right now.
Yeah.
I mean, we were
And
$33 in October.
we need to acknowledge that a number of holdings in the RSX are halted this morning.
Okay.
Yandex, Kiwi, QIWI,
Yeah.
MTL, MBT. These are all Russian companies that trade in the U.S. that are in the RSX ETF that are and have been halted now for a couple hours this morning. So I don't even know when they're going to reopen at this point. There's no
Right.
Yeah, I mean,
well, there's this stuff about and I didn't dig into it, but I saw the headlines going by that Russia was going to try to stop the selling and some of their stocks somehow.
The market didn't even open.
Yeah,
the Russian stock market didn't even open.
Yeah, so we're trying to price it, just what we think.
It didn't open at all, Spencer.
Didn't open, and they prevented selling in I forget what market it was. Now, again, the news flow is very difficult to keep up.
So many, and I don't have a playbook for all this. Like we got to go back. Like we don't have a playbook for not allowing markets to open. Like in this case, with Russia, we don't have a playbook for talks of nuclear war. Look, we don't have a playbook for any of this stuff.
The chart that I just brought up is the chart of the ruble against the U.S. dollar. Right, ruble crashing here overnight.
Yeah. If you watch it, put it on the inverse, it would look like more. That looks like it's blasting off because you're looking at it invertedly.
No,
but
well,
still, that's a crash. So that's a ruble.
This is a crash for the ruble.
Yes.
This is good for the dollar. This is a crash.
Yeah,
for the ruble.
but I meant if you did ruble to U.S. dollar, would look more.
It would look
to your point because somebody that's newer might not get that. So
good point.
So, anyways, I mean, we're just in a point where I think you've got to be still cautious. And I know everybody wants to be aggressive. And they want to be the lowest end. And you know what? Maybe the talks cool off and maybe it's going to go. If you're all cash right now, that's not cautious either. I think it's about being balanced. You could say, oh, I'm all cash, I'm good to go. Well, not if this market blasts off without you either. So, I mean, all of a sudden, if the talks start to, work to a certain extent and Putin gets less aggressive, I mean, that would blast the market off very, very quickly. So I think you want to have some stocks, but I don't want to be loaded in stocks. So I just want to be balanced right now because of all of the unknowns. That's talking the long-term portfolio.
Yeah, not
Trading
just
portfolio, zero swing trades on. I have zero swing trades on right now. Lots of day trades. I have 55 overnight positions. Those are all going to be closed out at 10 a.m. In and out, in and out, in and out. Just scalping, relationship-based stuff. This stock's here, this stock's here. There's a relationship there. I'll buy this one and short this one. All relationship-based is what I'm doing right now. Little scalps, relationship-based trading.
I think with the oil, I mean, they could have all the oil in the world, right? But they kind of need us to buy it, right? I mean, all
Well,
the
they need
wheat,
somebody to buy it.
yeah, all the wheat in the world, coming out of the Ukraine and stuff. They're really economically are very dependent on us. So I don't know what their economy would look like if they're not shipping oil here and it wasn't in the greatest shakes to be in. So that's the thing in my mind that I've been thinking about with the oil and the wheat and the commodities and stuff. But just going back, you're talking about the overnight trading and things like this. I think in this kind of environment too, and I don't know, everyone has different styles and stuff, but Dennis obviously trades hedge and gets flat at 10 o'clock. I think if you're really active and if you're doing good, even if you're doing good or bad, it's probably good to flatten out or have some kind of hedge at the end of the day. Because then you come in and you have a whole nother second circuit. You
You can
can't
sleep
anticipate
well
what
at
the
night
news
too.
flow is.
Yeah. Well,
You
and to Joel mentioned off the top of the show the fact that they're having peace talks right now, and at various points yesterday, I saw a headline and I thought, oh, this is either good/bad for tomorrow morning, right? In terms of the market, because I saw the new comment and I thought, oh, there's no way we open higher. But then I saw the thing about the peace talks and I thought, oh well, we might open
maybe
higher.
we do open
Right?
higher.
So I don't even
I know.
I'll tell you guys this: it is very rare that at 5:45 p.m. on a Sunday, I'm at my computer waiting for the futures market to open. But that's what happened yesterday.
Yeah.
Because I was so
Yeah.
curious to see how we're going to open here. Because I don't know.
Nobody does. And that's the whole thing. And that's why I'm not going to pick on the technical analysts out there. They do a great job, but I will tell you, technicals still work the best in the absence of news. I've traded for 22 years. We've had some fantastic technical traders at Bray Trading, and they're really good. But I'll tell you, they'll do the best when we're not in a headline-driven market because the headlines throw everything out. So it's the same reason why a lot of technical traders don't want to take a stock through an earnings report because it's a wild card. Right now, those headlines are little individual earnings reports, little wild cards. Wild card for the market, wild card for the market, wild card for the market. So, it's difficult. It's a difficult market to trade just pure technical in. You can look, and after you have news, where can we go? That's all works. There's still a place for technicals always.
That's where it comes
We
in.
talk the technicals, but the technicals will not predict direction right now off of a headline because we don't know what that next headline is going to do. Once you get the headline, then the technicals come into play. It's like, okay, where can we go? So we look at those highs, lows, trends, and support resistance. But just to come in and flat out make a technical trade right now, because there's a nice setup, you get the rug pulled out from you here over the weekend because of headlines. So it's a huge headline risk right now. So you just got to be cautious. If you're a pure technical trader, and a lot of traders that listen to the show are, you're just sitting back a little bit, and obviously you can do the short-term day trading. That still works. The technicals work. But again, we have breaking headlines in the middle of the day too. So it's a tricky market right now to just be leaning just on pure technical.
You don't have to force the issue too, especially if if you're new and you haven't, been in this kind of market environment. You can either you can be a little bit more discretionary, or you could trade. Also, another thing to keep in mind too is when the markets are moving like this, and let's just say normally you're a 1,000 lot trader, you don't need 1,000 shares. You could do the same damage on the upside and the downside with let's say 500 shares or 600 shares. I mean, you have to.
What a great point.
Yeah, you have to be. Believe me, and
I,
then that way,
Size
if you do that with multiple positions.
I will tell you the same thing. When the volatility increases too much, I actually, even if it's working for me, I sometimes am in decreasing my size because there's so much more risk. So, even, you're like, why would you ever decrease your size? I mean, there's a point to be made because, what was moving for 300 shares before is moving for 100 shares now. So maybe I'm decreasing to 200, just to control risk to a certain extent. I'm not saying to do that across the board, but there's, you've got to consider that, especially from a risk return perspective, is that the risk is so much higher right now that in some cases it makes sense to reduce your size depending on your overall trading style.
All right. So, do we have any stock-specific
Well,
news,
yeah,
or are we just going to talk
we
about?
do. We do. And maybe the last thing I'll add is like the two things here that really concern me. One is the whole nuclear war threat, obviously, but then the other concern here is the whole contagion aspect, right? Is like, well, the Russian economy is tanking. We all know this now, but what domino effect does that trigger, right? In other parts of the world, you don't know. So maybe it doesn't, but maybe it does. Yeah, those are the unknowns here. We do have some stock specific news, though there isn't much. As I said off the top, there is a giant vacuum of news out there. Everything is all signs point to Ukraine and Russia.
Yeah.
Everything else takes a back seat. The only stock specific news we have this morning is coming from over the weekend. The Berkshire Hathaway annual letter was released. If you don't read that, I'll put the link in the chat. It is one of my favorite things to read every single year. I love the way Warren Buffett just makes things so easy to understand. He's so folksy.
Yeah.
I'm always in a good mood after I read it.
Awesome.
He just don't. He doesn't. It's not like he's dumbing it down. He just speaks in plain English,
that's what it's all about.
Yeah.
I mean, that's what is. You really understand something when you can simplify it to explain it to somebody who is not even in the field. That's when you really understand it, and that's when you have a real edge. Is when you have that much understanding that you can simplify something so much. So, did you have an example like from? I didn't read the annual letter. There's a lot going on this weekend. Yeah. Berkshire Hathaway was definitely not my focus, but
that's understandable. No, I mean the biggest takeaway from the letter itself was that for years, Berkshire or Warren Buffett has expounded like the three pillars, right, of the company, right? It's the insurance business, it's the energy business, it's the transportation business. Well, now there's a fourth pillar, and it's their Apple investment. Because their Apple investment is huge. They own 5.6% of the company of Apple at large.
What did he say about that?
Their Apple stake is worth more than $160 billion. It counts for 40% of their overall portfolio, and they talked about it a lot. How can they not talk about it? It's a huge part of it.
Why has he done that? Why has he allowed that to become such a huge portion? Because now Berkshire Hathaway, I look at what Apple's doing. You got to really watch because there's a huge correlation in Berk and Apple. I mean, Berk was always, more value stuff, and Apple certainly is, more classified, I was saying, on the value tech as opposed to the growth tech. But why has he allowed that to come that big in his portfolio, did he say?
Well, he attributed a lot of that appreciation to Apple's own buybacks. Apple's buying back their stock, and that increases the value of the stocks currently in the market. So that was one thing he attributed to, and he was very effusive and praised Tim Cook in the letter. Should be noted that Berkshire Hathaway has also bought back a lot of their own stock in the last couple of years. But no, that's all he really said was they bought back their own stock, and that's how propped up our investment. But
Are you telling me that this guy has this big a position? If I could ask one question at the Berkshire meeting, you know what it would be? Like, are you selling calls in Apple? Are you buying puts?
I don't think he's ever done that.
Come on. The best investor in the world. I mean, we talk about options and things like that.
But he doesn't hedge himself, and that's the one thing to consider, Joel, is, and I'll take the other side of this argument, is...
Sure, I want to hear it.
It is, in the long term, if you still believe in the upward drift, hedging is a cost. Hedging is a cost he does not want to incur because he still believes in the long term. He's got such a long-term thesis. He's not going to hedge himself. He's not a market timer. When you put on a hedging trade, you are trying to time the market. When you're buying something for the next decade, you're writing calls against it, you're trying to time the market, saying it's not going to go up more than my call premium. It's not his style. That's not what he's about. So we're traders. So yeah, we like hedging. Yeah, we can see a headline, we're like, okay, what does this mean? I don't like the markets for the next month or two till this stuff figures it out. We hedge ourselves. But he doesn't. And the hedge is a cost. You're buying, even if you're just writing options, you can say, oh, you're bringing in premium. But the cost comes if the calls go up more than the premium, if the stock goes up more than the option premium you brought in, then there's an implicit cost to that. So he's not a market timer. He's always said he's not a market timer. It's not his style. And if you're investing with Warren Buffett, I think I'd be disappointed if he started writing calls and stuff on it, because I know when I'm going with Buffett, I'm going into stuff, where he's got the 20-year time horizon and he's buying stuff growth at a reasonable price. I love investing with Warren Buffett. I actually don't own any Berkshire. I should, but my whole style of investing is around. And I don't typically write calls against my portfolio either. For the same reason as that on the long-term stuff, because you want that upward drift. Trading, yeah, I do all kinds of fun things trading. But the long-term stuff, you're just trying to hope and hold that the market's going to grow over time. I don't know if
it's his style. I don't know if it's his style to hedge to put on any long-term hedges. That kind of defeats the purpose of it.
Right? John says he sells calls. I've never seen Berkshire Hathaway. You can bring it up.
Do they have to
never
disclose
seen...
that, Dennis? Do they have to? Do they have to disclose that?
I think so. I would think so. If you have open calls,
I don't know.
So.
With derivatives, it's complicated. I really don't know what the rules are as far as options or swaps.
On the 13Fs?
Yeah, I really don't. I'll be honest. I don't.
Spencer, are you going to the meeting?
I also don't know the answer to that question.
Okay, well, submit my question because, I mean...
I just want to know why he let it grow that big. It's not his style. What is not his style is to put all his eggs in one basket. And when he's 45% Apple, that's a pretty big basket. Well, that is what
Let's clarify. It's 40% of their equity portfolio. It's not the whole company. Berkshire has a bajillion other...
big chunk of it, though.
Yeah, but it's not like, again... The 4 pillars, right? Railroads, insurance, energy, and now Apple.
Can you get Warren on the show? We tried.
We probably could. We could probably push.
Raz with his connections.
Raz could
call Danny Gilbert, and then Danny Gilbert could call Warren.
I think Raz could get Warren directly. We got to talk.
He probably want to do it.
I think he could. Raz has said before he thinks he could get him.
All right, let's put out a personal challenge. Everyone, should we put his cell phone number?
He's scared what we're going to ask him. Raz is scared what we're going to ask him. Joel's going to ask him, why don't you hedge with options? Can't you see the market going down? And I'll be like, why'd you let Apple grow to 1 bit? And he'll say, I'm never coming on that show. I think Raz is scared to bring him on this show for good reason.
I don't think that would be an issue anyway, Dennis. If Warren said he's never coming on again, let's be honest. He's 91 years old. All right. I mean,
I would ask him. You know what? Also, I would ask him, what does he think of the metaverse?
I'm sure he doesn't like.
Well, we already know from Charlie that I think that they don't think much of the metaverse. So I'm probably on the same. I think there's a place for the metaverse. I like Disney as the metaverse play. I still like Disney. Let's talk.
That was a good call. You talked.
It's pulled back. Well, it's been a good call. It's like pulled down from the earnings, so it got smashed and destroyed. On Thursday, bounced back. Would I be buying a dip on Disney? Like, let's say you got some cash and you want to be buying some dips and you got a dip here this morning. What stocks are you buying? I'd buy some Disney. A long-term 5-year time horizon. I think I'd buy some Disney right now. What they got I don't think the Disney Plus is working as well, but a lot of that premiums come out of it now. The parks are getting back open. I mean, we go into a nuclear war, it's not going to be good for Disney, but we're assuming there's no nuclear war happening. I think I'd house it up a little bit right now.
We got a big lot. Well,
I have a little piece of Disney already.
Okay, this is first. Come on, what's sticking out here to you, Spencer? I'm making this really big and easy for you.
This is
what is a big level a huge level in Disney today, tomorrow, next week, next month?
140.
Yeah, you're looking at support, but
okay. Well, are you looking at resistance?
Yeah.
Oh, I always do that. I always go the wrong way. Whenever Joel wants to say, I always go the other way. Resistance. 1, 2, 3. What is that? 150.
Yeah, just ballpark it.
6. What is that? 6.
150. No, that's too high. I'm looking more short term.
Oh,
you're looking at 150.
You're looking at 150.
Gotta get through that 150.
Yeah, that's just such a nice round number. But just one quick tangent today. I know we're not doing any tangents today because the market's so busy, but you mentioned Charlie Munger, right? And then Charlie Munger, big Michigan guy, right? Built a huge dorm and everything. I went to the Michigan game yesterday. Unfortunately, we lost. But speaking of Zinger Nation, I did have a $19 sandwich at Zingerman's that my brother-in-law bought for me. Very good. You got to get some Zingerman's Deli, one of the best delis in the world. So because it had the zinger in there, Michigan, I had to big it in.
Promotion for Zingerman's.
It's great. You ever been there, Dennis?
Where is that?
It's in
Ann Arbor.
No, but where? I've been to Ann Arbor.
It's
Downtown?
kind of Carytown, near downtown. It's not on the
No,
campus.
I don't think I've been there, no.
Okay, Spencer, real estate.
So Dennis asked about Disney, which doesn't interest me right now as much. That's not as interesting a question as like the defense stocks. That's a much more interesting question.
Yeah.
Lockheed Martin, Raytheon, Northrop Grumman,
Yeah.
LTD. That's a much more interesting question to ask this morning than Disney. No offense to Disney. But
I've got the LMT RTX pair on right now. That's just short term. So I'll just limit my comments, but I just say overall as a group. And that means when I say pair, I'm long one, short one. So I'm just trading them against each other. But I mean, LMT breaking out to new highs. I mean, this is typical. You're going to see this, but this is all just headline.
Yeah.
They're all just going to trade on headlines.
Ooh,
yeah.
So war escalating, these stocks go up. War starts talks. So these are actually counter market trades right now. So if you're buying LMT, it's going to move opposite to the market right now, the overall S&P. So, and that will eventually correlate once again, but right now completely opposite. You're buying, you're betting on escalation of war talks of the war over there. So, and obviously even escalation of war talks elsewhere. So that's what you're betting on with all those plays. Give the four I always look at. Maybe you have some other ones is right: LMT, RTX, GD, and NOC. Is there any other ones that I'm missing?
No, you got the.
I mean, you got LHX too. You could throw in there.
Yeah.
L3.
Yeah, you see,
the five, the big five.
Yeah, the big five.
Now, I know you guys think about that, and being traditionalists and everything, but when I think of war stocks, and I'm kicking myself because instead of writing an article about it, I should have been buying the stock. But this is my defense stock right here, baby. CyberArk and also Palo Alto Network.
I think on pullbacks, it's got a good point, Joel.
We should mention that trade last week, Joel. So it's not just those two. Palo Alto up 18%, CyberArk up 13%, CrowdStrike up 10%. This is last week. Mandiant up 10%, Okta up 7%. I don't know what SAIL is, SAIL. That was up 16% last week. Qualys up 7%, Fortinet up 6%, Norton LifeLock, Okta, Checkpoint, all Zscaler. All had great weeks last week.
Yeah.
The whole sector.
Yeah. I think you have a good point here, Joel. I think you have a good point with the cyber stocks. And I would be the buyer of cyber stocks on the pullbacks here. Obviously, I wish I would have been buying more here in the last, on the last dip. The opportunity was there 2 days ago. Jeez. Palo Alto, that's one of the biggest moves that stock has ever had. So we go from a good earnings report where they actually hit every stock the next day, and they hit this too. After the good report, props to Kramer. We beat him up a lot of times, but he was saying to buy the pullback on this. He was absolutely correct. 470 to 570 in 2 days. Can you come in now? It just right $100. So I don't want to chase it now, but I tell you, on dips, the cybersecurity stocks are a good play in this environment right now. So CYBR, PANW. You can go into Sentinel One if you want to, a little higher valuation, a little newer stock right? There. Yeah. That's S, yeah. And then CrowdStrike as well, CRWD. Those are the ones I think about. There's Norton LifeLock and LOK, which are not as sexy of names. Those are 5. What other ones you got for me? Let's get a whole list going.
I said Zscaler.
Did I say them all?
Zscaler.
Oh yeah, Zscaler. Obviously, Zscaler were disappointing earnings.
Mandiant, and that's the former FireEye.
What's symbol on that one?
MNDT.
I don't trade that one.
Well,
and so the old FireEye, Dennis.
Oh, that's FireEye. That's the old FireEye.
I just said that. I literally just said that.
I know. So I heard you say it, and I didn't process it yet. So thank you. Thinking.
He's on the delay.
I'm on the delay. Everybody complain about the delay. I'm on the delay here.
Oh my gosh!
All right.
Qualys.
What about Palantir?
We don't know what it is.
I don't know what it is.
All I know is Kathy's. I think did she sell any on Friday? She's really slowed down the selling.
Yeah.
She thought she was gonna get rid of it all. Then she started selling like 1,000 shares.
I was gonna say she's selling 1,000 shares across.
She sells like 5 million shares. Oh, I'll sell 1,000 shares. Oh no, 200. ARKX, she sells 200 shares. ARKX, she sells 100 shares. This is not a made up. She literally sold 220 shares in ARKG. What the hell is the point for her to sell 100 shares of something ever?
Commission-free trading.
That's wasting her trader's time. Anyways, she wanted just to make a point that she was still selling, I guess, but she's selling 100 shares.
Net is also one.
Fortinet, FTNT, a lot of these things.
What's
FTMT is a
going
good one
on?
for
Did
the
we
chat.
get a little bad news? I don't want to be too reactionary here, but
All right, I got to cancel orders.
Nothing's going.
No buys. No buys.
Nothing's going on. Whatever.
Yeah, just a 15-point move. That's nothing. And also,
Nothing in
I
this
know we're going to
market,
bring
Joel.
Tim on in a second.
Yeah.
But what do we got on Friday? What do we
Jobs
got on
number?
Friday?
Jobs number?
Yeah. Who cares?
What about
Right?
IronNet? What the not
I-
is
I-
IronNet cybersecurity?
IronNet is.
What is that? I don't even know what it is. I've traded before, but what is it?
Matt's asking because there was a short report on Friday about it.
So this is. I thought he was asking because it was a cybersecurity. What do they do? I have no idea what.
It went
sounds
up
like
on a short report.
The name of it sounds like it should be cybersecurity. IronNet. We stop.
Yeah, I mean, it is a cyber play. You're right. It is.
It sounds like it is.
But it's much smaller. It's a $500 million company.
Yeah.
And they got a very bearish short report on Friday. Yeah, because it came out.
They got a bearish short report. The stock ripped that high.
No, it didn't. No, it didn't. The short report didn't come out until like the afternoon. It came out like 2:20.
Oh, and then it started coming after that.
Yeah. So
I don't trade these smaller micro cap stocks, and it is when you get down under $1 billion. I typically don't trade any of these things.
It's not a micro cap. It's $500 million.
500 million. Anything under $1 billion is what you're on the delay. I just said anything under $1 billion. I throw it in as micro cap.
Gosh.
What do you throw in as micro cap? Where's your parameters? For
300 million is the
under 100 million.
300 million. Are we communicating today, Dennis? Me and you?
No, we're not. I'm on delay and you're on delay.
Do you know RTX?
Micro cap for me is under $1 billion. I'll change that. Under $1 billion.
You know what? RTX makes you know what the Iron Dome is, Dennis? I know, Spencer, you know what it is, right?
Yeah. Yes.
Yeah. Do you know that they're developing that for the water too? To get missiles underwater?
That's pretty cool. I didn't know that.
The Iron Dome, Dennis, you know what that is? You should check that out.
No,
it's a defense system that Israel has, and just missiles come and they're just going to shoot them out of the sky.
Very, very cool videos.
I hope we have that as well.
That in action. All right,
yeah.
Let's bring on Tim here. It's Mondays. You know what that means. It's time for Market Structure Mondays with Tim Quast. Tim, how are we doing?
Well, thank you. Good to see you guys. How are you? I'm a little bit. Dennis was doing the dance. This is what we were doing the last 3 days at Winter Wondergrass here in Steamboat. So I'm a little hoarse from screaming and shouting enthusiastically for the Kitchen Dwellers, Yonder Mountain String Band, the Wood Brothers, just some great music outside in sub-zero temperatures here in Steamboat Springs.
I want Tim's life. He lives it up, man. He's got the dream. I got below zero temperatures. I'd listen to some nice music here, but nobody's coming up to Georgian Bay anytime soon. So
there's not a Winter Wondergrass Georgia Bay?
No, unfortunately, no. We used to have some type of winter thing up here, but with COVID, I think it all got canceled. Remember, Ontario's still in COVID. Rest of the world's over with, but Ontario hasn't got rid of it yet.
No, that's too bad. Well,
Tim, tell us what the market structure. I was reading a little bit over the weekend and this morning just about lack of liquidity in the markets, what that's doing for volatility. Give us your perspective on that.
Well, we talked about that a little bit last Tuesday, I think, didn't we, Spencer?
A little bit, yeah.
I noted that the average trade size in the S&P 500, so this is the number of shares traded each time a trade occurs, was 100 shares, which is exactly the regulatory minimum to make a bid or offer, to quote. And yet at the same time, the average number of trades in the typical component of the S&P 500, realizing it will be skewed by some of the larger components, was 50,000 trades. It went up from 40 to 50,000 trades last week in the 5-day average. So that's an astonishing number. And
could you say that again, Tim? Could you explain that again, please?
Sure. Yeah. So pick a component of the S&P 500. How many times a day does it trade?
Okay.
Well, the 20-day average is 40,000 times a day. The 5-day average was 50,000. So that's an increase of more than 20%, whatever that number is, 24%, I think. So 24% increase in the amount of activity at the same time that the trade size dropped from 109 shares to 100 shares. So that's an indication of a lack of liquidity, Spencer. What that means is that you have to do a whole lot more stuff to accomplish what you could before. And it tells us that the amount of shares that are readily available to buy or sell is really very, very small.
Yeah.
And that's a liquidity problem. So then if there's volatility, you get massive moves in the market. That's how the market goes up and down in extremes, like we saw Thursday, Friday. Then as soon as we came out of the options expirations period, remember, we talked about this too Tuesday. I said, generally speaking, no matter what is occurring on the planet, that if stocks are down into options expirations, they will be up afterward. That is the central tendency. And it proved to be true, even though Russia invaded Ukraine and the Fed reaffirmed that it's focused on raising interest rates. Well, back up 3 weeks ago, and there was all this hand wringing about, well, the markets are very concerned about hiking rates. Well, then why did the Dow go up 830 points? Best day since 2020. Well, there's your answer, Spencer. Liquidity, the absence of liquidity, combined with the presence of machines that change prices, and third, getting past the expirations period where the uncertainties are removed and machines lifted the market sharply, and human beings who don't want to miss out on the bottom followed them. But then what do you have today? Well, I'm not saying that we're going to give it all back. I can tell you that in the S&P 500, again, another data point, we love data, 49% of all trading volume is currently short, borrowed. And so for half the volume to be manufactured or used temporarily creates an environment where it's very difficult for the market to hold its gains. If the buying ceases, the presence of a lot of artificial liquidity in the market will push it down, particularly when the trade size is very small. So other than that, everything's fine.
Huh. And I mean, this is what you're talking about with liquidity. This is the market makers backing off the quotes. This is what they do in times of stress. It's called, if you want to go, it's called adverse selection risk, where, you got a market maker that's sitting there with the bid and the offer, and they're basically in this environment, the bulldozer just got a lot bigger. So they're backing off the quotes. So they don't get run over by the bulldozer. I mean, when you look at the markets, and right now it's absolutely, I was actually talking about this even after hours. I have not seen this, Tim. Maybe did we talk about this 2 weeks ago? The S&P being wider than it normally is. So SPY versus the futures. The SPY algorithm that is trading after hours is usually trading in a 3 cent range, 3 cent spread. They've backed it off to 7 or 8 cents, and I can see it, which is incredible. I haven't seen that in years, where you actually have the algorithm that's doing the futures S&P ARB backing off too. Like the futures is the most liquid vehicle, and the SPY is very liquid that tracks it. So for that algorithm that's running that to back off a little bit too is telling you that the adverse selection risk is high here. They're getting picked off at 3 cents, so they're backing off to 7 or 8 cents to keep making money. Because that's what you do if you're running an algorithmic market making system. And Joel, you were a market maker, and I've run small cap money market algorithmic systems. For years I ran them in the early 2000s. You start losing money, you backing off a little bit. Okay, we're too tight. We got to back off a little bit, and that reduces the liquidity that Tim's seeing.
And that's not a change of 3 or 4 cents. It's a change. It's 120% increase in the spread. That's what it is. That's an extraordinary increase in risk for folks who don't actually want to own something. Market makers are hoping not to own anything at the end of the day. So you can make a lot of money on those spreads, but it also means you want to be out for sure by the end of the day. So it creates additional risk, no question. By the way, in SPY, short volume is 64%. 64% of the trading volume is short. That tells you it's an arbitrage trade. That's what it is. You can very easily go short SPY and long a basket, and then it goes back. Well, what does that create in the market? It creates an absence of capacity for the market to sustain its gains. You get some big moves, and then the market gives them back. That's a challenging environment for traders.
Dennis, you've given a lot of great information on this show over the years, but that stat that you just gave,
Well, no, just my observation. It's not even
no,
a stat.
it's not a stat. Yeah, your observation. I mean, to me,
I was
that is the
talking.
most. Yeah, that is
It was actually
so
another
telling.
trader, Rob Friesen. You know Rob, and I
Yeah.
was talking with him on the phone about it last week, and he was seeing the same thing. And I'm like, have you seen that before? I'm like, have you seen the SPY quote back off like that on the futures ARB? And I'm like, it's been a long time. I probably have to go back to thinking about it. Like, you don't remember maybe, but probably going back to the financial crisis. It's been a good decade before I saw an
What
SPY
about
futures
COVID?
ARB
What about
bought
COVID?
back off a bit.
COVID.
No, I didn't see it then. Maybe.
Really?
Well, maybe it was so crazy then, Joel. Though we
Right.
got so and it's it was crazy. We were down 2,000 points one day. I mean, that was a crazy environment. So I'm sure it probably did it then too. But it's telling you the risk is elevated right now.
And I just want to make just one, Tim, I'll let you go. Sorry. I just want to make one comment about that for traders and, whether you're new or active. I mean, it's more risk, but that does create opportunity. I mean, you put your order, like, don't hesitate. Put your orders out. If you have a target in something, like somehow if Disney goes back to 150 today, I mean, have your order out there at 149.90 because it's going to get taken. They're looking for liquidity. So if you have your points, man, don't market it. Don't say, "Oh, I'm going to do better than that price." Say, "Hey, stick it out there, do it because you're going to get done for better or for worse."
Yeah, and from a perspective where one can observe where your trades occur, and adjunct to that point, Joel, I as I've mentioned before, I pay a small commission so I can see where my trades occur. When they're being executed in dark pools, including my own broker's dark pool, I know that there is more demand out there. When my trades make it to the NYSE, I know I'm in trouble because that's where you go. That's where orders go to get picked off, to get adversely selected. So yeah,
that's the truth. When you start seeing the volumes, and this always happens, the off exchange volumes start dropping with increased volatility because too much toxic. We send those orders away because there's a lot of risk happening.
Don't want that one.
I don't want that one. I don't want that one either.
Well, I don't know if we're helping anybody here who's hoping to figure out, where's the money going. It's what do you do in this environment?
Right.
Good question. We should ask you that. What do you do, Tim?
Yeah, Tim.
Where's the money going?
What is your playbook for this environment?
Well, as ever, it's diverging supply and demand, particularly where demand, the way we look at this, 10-point scale, is 5 or better. I want to own things with demand at 5 or more, meaning there's excess demand and diverging supply. So I could give you a couple of examples, and they're not sexy stocks. Pepsi and Progressive, PEP, PGR. These are two examples of stocks that have the kind of market structure. I think of that as the behavior of money behind price and volume in context of rules, and those things will cause stocks to go up or down, and you want those things to be as favorable as possible for you. I could look at the FANGs and say, well, they're bottomed, and there's been an enormous amount of short covering in the FANGs, but I can't profile returns to save my life in that group. And if you can't mathematically establish that there's a probability of gains, then the math is telling you be very careful. I'm not saying that you can't, get a gain in Apple or this thing or that thing. I'm saying that that's not where the money's going. Right now, the money continues to manifest a very cautious posture, which shows up in how appealing the supply-demand equation is in Pepsi or Progressive. And we could look at, a number of others like that. Here, I'll share my screen. By the way, you can tell I got some sun too. We were out snowshoeing, and it was just a perfect day. But we got a pretty good tan at the end of February as a result of that. Okay, here we are.
Living the dream.
What a life.
He's living the dream. He's always living the dream, man.
It's so here's how I look at Pepsi. And again, this is supply demand. Traders, you can do this too. MarketStructureEdge.com. You could name and email. You can try this. Try it for a couple of weeks and see if you can follow how we think about this. It's a very simple way to think about the market. All economies establish prices through the nexus of supply and demand. All commercial activity somewhere arrives there. There can be things that distort those outcomes, and the market has those too. Options expirations are one of those. Today, index futures expire. It's part of the reason that the market is down. It's not that people are rethinking the risk in Ukraine. This is a product of huge moves in the market that create liabilities for counterparties, the parties who sold those and who have an obligation to fulfill them. And so you're going to see volatility today. It's very important to know. That another rule, new month, new money. So tomorrow, there's going to be money coming into the market in all probability, and it will go places. But so here, look at this. There are just three things to know. This is PEP's price. This is Pepsi's price, 30-day view. This is the supply-demand equation. Notice how it stayed right at 5, so you don't get a whole lot of price movement. What will then cause the price to go up and down is the third input here, which is supply, short volume. So if demand stays level but supply rises, what will the price do? It will go down. You don't want to own it when demand is below 5. Now, demand is rising again and supply is falling right into a new month. That tells me that there's a probability that low volatility money wants stuff like Pepsi. Okay, well, let's follow that, right? We just want to follow the money. And the same thing can be seen in PGR, Progressive, with the hilarious television commercial advertising. But here again, we can see the same condition. Generally, it's a 5. When supply rises, the price falls. And you don't want to own it when demand is below 5. Now demand is reverting to 5 and supply is below the trend, below even 40%, well below what's occurring in the broad market. Well, once again, that tells me that from an options and futures standpoint, that the large institutional money, index funds, quants, they're long. That doesn't mean the price is going to soar, but it tells you that there's a very high likelihood that these things outperform the broad market. And if we can always outperform the market and you just keep taking gains and not chances, you can make good returns. So that's what we look at. Those are the things I would offer, Spencer.
Awesome. Tim Quast, Market Structure Edge, link on the screen, a link also in the description, marketstructureedge.com. Tim, always a pleasure. Have a good rest.
Always a pleasure to see you guys. Have a great week.
Tim.
Thank you.
All right, we got 7 minutes left. Let's do some ticker time. Drop your tickers for us in the chat. We will give you our informed or uninformed opinions, and Joel will give us his levels on what he thinks is significant for you. To recap, Tim just mentioned 2. He mentioned Progressive and he mentioned Pepsi. Let's go to the first one that I see that we haven't already discussed today. Let's go a little bit off the board here. Let's go. Okay, we can go Rocket. We can go RKT. Sure. We don't talk about this stock too much.
They had earnings, right?
Thursday, I think. Last Thursday, I think.
Triple D, you want to go first, or you want?
No, I haven't liked this stock for a long time.
Yeah.
I mean, it's got you've bounced significantly off the lows, 10.55 to 12. Now so you already had a big move off this thing, 15-17% in 2 days. So if you are getting into it, I'd wait for a pullback here. Rising interest rate environment is still coming. Whether they're going to rise as much, maybe not, with war going on, but it's still coming. And I just don't think it's the environment I want to own a stock like this in. Sorry.
I'll just go short term here. Nice move off the actual new all-time low. You just gotta. This is like one of these moves where you just gotta see follow through, right? And it already started to wane a little bit on Friday, and that was a pretty good market day. So for me, man, 13 is the super nice round number. But I'm seeing Friday's high and the weekly high right at 1270, 1284, and you're 70 cents away from that. So that's major resistance for now. If you want to try and buy this on a pullback, what you went from 11 to 1270, $1.70, right? So that's 85. So maybe you want to try and reload. I would wait till get closer to 12. 12. That could be. Little bit of a pullback there, but really important for it to clear this 1280 high.
What about this is an interesting one. What about Realty Income Real estate.
Oh, you remember O?
For Chris. Chris wants to know about O.
It's usually defensive.
Oh, look at that. Oh, this is so easy. Just look at these monthlies, man. You ain't going nowhere till you take this out. That super extra monthly resistance. You got to absolutely respect that until it gets through 72. Path the least resistance lower. I know that's a ways away, but that thing's just sticking out to me like a sore thumb.
All right. Matt Miller with a super chat for Taiwan Semi. We talked about this one last week as well.
Tough one.
The scared of.
So sensitive to the news headlines right now. And someone else mentioned Baba. It's kind of the same story, right? Not to this quite to the same degree, but anything out there, anything with China or Taiwan or Russian or Ukraine,
high headline risk right now.
Headline risk is very high.
Yeah, and Baba, wow, $100 bounced right off. I mean, you got to go to the psychological levels. Look at that open on Thursday, right at the very low. Open at the low, $100.07 off of a big psychological level. So 100 is huge support. Yeah, you're there. You bounced off at once. It gets back down. Does it bounce again there? It might, but to your point, Spencer, there's so much headline risk out there. Do I want to go into the stocks that have more headline risk than the other ones? Not really.
I don't know if you do. Yeah.
Got to get through 109 here. Plain as day. High on the bounce day, 08.95. Sellers stepped down yet on Friday, 08.55. Looks like they're stepping down today. So got to get through 109 for any upside. On this one, if you want to try and pull back, maybe 104.50 and lean on that $100 low. But boy, China's been kind of quiet, huh? That's kind of
not really. I mean, maybe relative.
I mean, as far as like
commentary to the Russian situation, they don't.
Yeah, that's what I'm thinking.
Maybe. I mean, I still see a bunch of stuff coming out of there, and I don't know. Maybe relative to Russia, they're quiet. But
yeah, there you go.
I don't know.
You set a high bar there.
Yeah, a very high bar to clear. What about AMD?
I love the company. Obviously, Lisa Su has turned it around. We bounced again. We did not make a new low. I think if you're looking to get into something and you want to increase your risk exposure, I mean, AMD around here maybe makes some sense. I'm not doing that, but you got the 100. The 100 is huge. We opened down right at the lows there on Thursday again, 104.26, and we bounced right out of there. So you get down. I don't want to chase up 119, 121. Maybe you look to Friday's low, 116. Maybe you can bounce there. I like it better than a lot of other stocks.
Boy, these highs are kind of. Just keep an eye. 3-star, 120, 150. Yeah, two highs in the same area. And I'll tell you the thing about AMD is like my numbers are not that I'll give you 120, 150, and then I'll look during the day and it will go like to 122.75. It will blow right through it and then come back in. So you got to give yourself a little wiggle room in that one. But I'm looking at 120, 150 as resistance. Buying on a pullback, pre-market support right now as we speak with no news, no other extraneous. 118 looks like you got a buyer.
Yeah, a couple more here. Someone just asked for the Qs. Joe, why don't you pull up the QQQ?
Haven't looked at the
I mean, it was your leader last week, right?
Yeah, and I think it will still lead. I think tech stocks. I'm going to just say that overall environment that we're in is if you were underweight tech and you've been underweight tech, I think it's time to start getting a little more tech into your portfolio. And I like the growth tech stuff. I actually like the Kathy stuff here. And I was talking about that last week. I'm talking about it again here. I
still can't believe it, honestly.
I think ARKKs and obviously nuclear war will throw everything out the window. Assuming there's no nuclear war.
Gosh.
57.50. I think there's a high possibility that could be the low for the year. So I actually am somewhat, and I've been starting to add some of the growthier names into my portfolio. Not getting crazy. Just nibbling into some. I know, obviously, I've bought some U, which is a pure growth name. I bought some Square. We know I bought that one. There's a few others. I've been nibbling into a few little growthy names, and they haven't been good. I mean, but actually, U I'm up in. I actually bought that one okay, but I'm just adding a little bit in there to the growthier names because I think. Again, my thought process was if we've got geopolitical risk, the Fed is going to be less aggressive. The Fed is less aggressive. That works better for high growth tech. So that's how I've got to that conclusion that I kind of want to own a little bit of high growth tech in here. If I'm going to own something. You know, I have no problem if you want to own nothing. Lots of unknowns, lots of headline risks. But if I'm starting to nibble in, I'd rather nibble into this than oil stocks, believe it or not, for the simple reason that eventually I think stuff will calm down over there. And when the dust settles, is the Fed less aggressive than they were going to be? Maybe. So I think high growth tech is a place where I'd actually be adding to on dips.
Q's has a similar setup to the S&Ps. Came all the way back last week. Actually, this got closer to Friday's high, the previous Friday's high. But this, the 340, 346. I mean, same setup as the SPOO. So, all right, I'm going to hop. I got the Brentster coming on. He's got a host of good topics to talk about here on Pre-Market Prep Plus. So, everyone, be safe out there today. Back with you at 10:30 with Pre-Market Prep with Stock Odds.
Speaking of the Fed, real quickly, this is from the CME Fed Watch tool, bringing that up here.
Yeah.
And again, I'm looking at these two cells on this table. This is what the Fed.
When do they update this? Daily?
No, it's real time. You just have to refresh. It's not a page that.
Oh, okay. So they're updating this all the time.
But what I wanted to say was I'm looking at the top row here.
Yeah.
This column here, the probability of a 0.5 point rate hike in March. A month ago was at like 40%.
Yeah, it's dropped significantly.
And now it's down to 12%. Right. So
yeah, it's too much geopolitical. I don't think they're going to go.
Right.
I don't. And somebody else was saying they think it's like 3 or 4% chance to only have a 50 basis hike. I think the way we were trending before, we were leaning towards that almost at a certain point in time, and now with all the geopolitical uncertainty, that's gone. So you got to analyze what works better in an environment where the Fed's not going to be less aggressive. I mean, the banks got hit for a reason too. So obviously the SWIFT stuff, which we never even got into, is not helping the banks here this morning either.
No.
I don't want to get into the banking system because that's above my pay grade, but not good for, bottom line, not good for a lot of things with, Russia and SWIFT. Just bringing it back though, I think if Fed's going to be a little bit less aggressive than we thought, that means maybe we've overshot on selling some of these higher growth tech names because some of these things are down 80-90%, not joking. And maybe those are the ones you don't want. Am I coming into Apple here? I already own Apple. It's a pretty significant rally. Apple's not even far off its all-time high. So I don't know if I'm coming into Apple. I actually like some of the really, really beaten down names kind of right now.
All right, we're going to hop. We got live training with Benzinga coming up next. Dennis, have a good one. Mitch, Ryan, and Junaid are ready to go to trade with you and take your questions. So coming up right here on youtube.com/Benzinga. Before I go, want to remind you all about Benzinga Pro. It's a real-time news platform. Get 25% off. The link to get 25% off is on the screen. It is also in the description of this video, and I will place it in the chat for your convenience. There it is. Get 25% off Benzinga Pro by clicking on that link right there. Thanks to our guest, Tim Quast. Monday's shows are sponsored by Market Structure Edge. The link to his site is also in the description of this video. Last thing is, if you're on YouTube, you want to support us, you can do it in two ways. One, smash that like button. Two, hit that little join button on the top of our page. Become a YouTube member. Get access to exclusive emojis and badges of myself, Money Mitch, Hot Stocks Luke, Aaron Bree, and more. And on that note, we are done for Pre-Market Prep today. Live trading with Benzinga coming up right now. Stay tuned for that. And everyone have a great rest of your day. Good luck off the open and stay green.